At the start of the AI front, ChatGPT can bring some benefits to businesses. Hello and welcome to another episode of the Solve to Evolve podcast. The purpose of our podcast is to give our insights to help you, the individual taxpayers, investors, and business owners navigate your way through what's going on in Australia today. And so today, we're in a different setting. We're at Snug Bar in Gymea, small local business, nice Irish pub. We thought we'd switch it up. Maybe this will be our permanent home, who knows, but let's see how it goes. I'm Phil. I've got Bloxy and Jono with me, fellow solvers. How are you today, gents?
Good, thanks, Phil. How are you?
I'm doing never better.
Very well, thanks, Phil. Yeah, good to be back in Gymea, my old stomping ground. I used to work just down the road, and yeah, it's a great pub, the Snug Bar. And looking forward to the podcast.
Excellent. So we do have water at the moment, but we might switch that up to beers a little bit later on. But look, let's get started. So there's a lot happening in Australia today, and I thought we'd cover 3 topics. The first one is getting ready for tax, ChatGPT for business, and property tax, which is definitely very important for business owners. Not business owners, investors. So let's get started. Getting ready for tax. Jono, over to you, please.
Thanks, Phil. Well, we're recording this podcast in the second last week of June. So you're going to be listening to this in early July. It's a new financial year, and you'll probably be thinking about getting your tax return lodged for FY23. This might sound boring, but it's important. Why is it important? If you've paid tax during the year and made the most of year-end planning and tax concessions, you might be due a tax refund. You should view that tax refund as your money. If you haven't received it back yet, you're effectively loaning it to the government. So if you're an investor or business owner, you could be multiplying that money and putting it to better use in your business. So there's 3 simple things I wanted to highlight for you to get the most value out of the year-end tax process. Firstly, get organised early. That means start collating your documents and any statements available to provide to your accountant if you haven't already. For investors that have managed funds or ETFs, the statements are usually going to be available around the end of September, but there's no reason why you can't start pulling out interim statements now and getting them ready. For business owners, if your books are reconciled by a bookkeeper, ideally they'd be closed off and available by the end of July for year-end tax processes. So that's the first one. Number 2, make the most of tax concessions. So now's the time you actually get to disclose all the concessions that you planned for before 30 June. So some of the ones we mentioned in the last podcast. For example, I spoke about the technology boost. So as a reminder, that's an additional 20% deduction on investments in your technology and digital operations. So for an example, if you spent $10,000 during the year on technology, you can claim $12,000 in your tax return. And I can confirm that law has been passed by the Senate as of today, but it's a 1-year wonder, so it won't be available for next year.
Jono, to stop you there, what type of expenses can be claimed under the technology boost?
It's pretty broad. The explanatory guidelines talk about a broad range of software, hardware, digital marketing, website. I think really anything related to digitizing your business, which you should probably be investing in anyway, is something that could qualify for that boosted deduction.
Makes sense.
So the last one is start planning now. So I think that tax preparation and planning is best done on a forward-looking basis and on a current basis. That's going to allow time to review your structures, your accounting systems, the investments that you're doing. As an accountant, it's difficult to do much for clients in the last 2 weeks of June, which is where we are now. And that's usually when end of financial year is front of mind, but you can do way more during the year leading up to 30 June. So if you do some work earlier in the year, you can revisit that periodically to get the best outcomes.
Excellent stuff, Jono. I wanted to ask, I guess, a lot of people out there don't do a lot of planning at year end, and then when it comes to lodging their tax returns, they realize that they should have done that. When is a good time for clients to reach out to someone like yourself or to Chris or to their accountants to do the planning? And should it be done once a year or should it be more regular?
I think it depends on your profile, but if you're a business owner, an investor, maybe you're both. You've got a trading business and you've made enough profit to start investing outside of your business, and you might have a self-managed super fund, then definitely that's going to be something. You probably start the planning process after you've lodged that 2023 tax return, get that out of the way, and then you can look forward. And the level of how much planning you need and whether it's quarterly check-in or half year depends on how complex your situation is.
I think I'd answer that one, Phil, by saying that for all of you investors out there, or for anybody who wants to progress their family group's balance sheet, tax planning really is a year-round job. Building a balance sheet for you and for your family group that is risk appropriate and that is tax efficient takes time. It takes years. It is a evolving work in progress that is subject to not just legislative changes that happen at 30 June that will affect you, but life events that you can't plan for. So being constantly aware of your balance sheet and how it's evolving and how it's paying you, and making sure that your assets are paying you in the most tax efficient way is something that can't be done at one point in time and forgotten about. It's like a garden. Weeds grow, flowers grow. You need to be sure that you're removing the weeds and watering your flowers and not the reverse.
Yeah, good analogy there.
So you're saying tend the garden.
Keep thy garden, and thy garden will keep thee.
Well said.
No,
Thanks,
good
Bloxy.
Good point there. Anyone serious about their family group structure or their investments and their personal life, financial life, really should be looking at their balance sheet, which is effectively their net assets, how much you're worth at any point in time, regularly, and checking in with their accountant or their financial planner, whoever it may be that they're working with, but just to make sure that it is growing year on year, or every period that you're reviewing that. So very important point. Thanks, Bloxy. Moving on to the next talking point for today. So over the last 6 months, we've probably heard a lot about AI, more specifically ChatGPT, and how that's kind of taken the world by storm as of late, and what it can do and how powerful it can be. I just wanted to chat, no pun intended, about ChatGPT and really how it can benefit small businesses.
AI means artificial intelligence, right?
Yeah, that's right. Artificial intelligence.
So like a computer that can think.
Correct, but without emotion.
Like the
without
Terminator
feeling.
is AI.
Effectively. So those with a bleak future on AI, they do feel like Terminators coming to fruition and all the bad things that come with that. But for now, whilst we're, I guess, at the start of the AI front, ChatGPT can bring some benefits to businesses. Now, for the viewers at home listening in who aren't too familiar with ChatGPT, what is it? It's effectively an AI generative chatbot. Now, when you think about it in layman terms, it's kind of like Google, but on steroids, a lot of steroids. And it works by taking in your prompts, and then from the data set that it's been fed, will then come up with a predictive response to your question or to your prompt. Now, I think there are quite a lot of benefits that small businesses can gain from using ChatGPT. Now, it can save time and money, and the way it will do that is, for example, if you're looking to get into marketing, it can help you with content creation. You can use it to write particular blogs using key SEO keywords as well. That's number one. Number two, I don't know about you guys, but I Sometimes I have to type up emails to clients or to a bulk of clients, and I'm sitting there for half an hour. And look, I'm a numbers guy. I'm good with my numbers, not with my words. And so I'll sit there for half an hour just typing up an email and then realize that it's wrong or not good enough, and I'll just close it and not think about it and maybe come back to it later on.
We've all been there, Phil.
Right. So it's not just me. Yeah. So AI, and I used this the other day actually, you can create email templates for you professionally. And so we've got, a pool of franchisees at the moment that we service, and I'd like to get a benchmark report out to them. And that will give them an idea as to how they rank amongst their peers. But then I thought, okay, how do I email this out to the clients to try and sell it to them or to see if they wanted to purchase this service? And so I used AI, it took about a minute, got there. I've got the template ready to go now. Of course, I've got to tweak it a little bit just because it is a little bit inaccurate, but the body of it is there and there's not much I can change because it just sounds too good. But knowing the target market, I know I've got to switch the wording around because we are targeting effectively mechanics, and if it's too wordy for them, they're going to switch off. So that's another benefit. But the third and biggest benefit I would see is if you're a small business looking to grow or you're looking to scale your business, you can use ChatGPT to help you create processes. So you can type into ChatGPT, I am an accounting firm, I am a marketing firm, or whatever business you're in. Help me build out my sales process. Help me build out my marketing strategy. Help me build out my accounts receivable process, my accounts payable process, my onboarding of staff process. And what you'll get is a high level overview as to what you should be doing or the process you should be following. And that will effectively set you a standard. And, to scale a business, you need a standard way of operating. Now, of course, with pros, there are always cons. And the cons that I have come up with, or I think there are when using ChatGPT, and look, it depends on where you sit, but it can kill jobs. So if you're a business owner, that might be beneficial for you because you don't have to hire that particular person or the consultant. But if you're on the other side, well, you're screwed, really. And you may be out of a job. But I think we're probably a long way away from that. I do feel like although it may kill some jobs, there will be more jobs created.
Yeah, I think that's important to note, Phil. It's not all doom and gloom. And the way that I would see AI working in the future is it's people who are using AI that will take those jobs, or people who aren't using AI. So use it as a way of multiplying your efforts and maybe allowing you to focus on other tasks that add more value to your clients or your customers. That's how you can use AI. It will take away some tasks or make some tasks redundant. But if we look back 20 years, and for people listening, the accounting industry before Excel and before Xero, accountants would be using dot matrix printers and things like that. So this is just it's a massive leap forward, but see it as an opportunity rather than a cost, I think.
Well, I totally agree. And as accountants, we know that there's always a debit for every credit and vice versa. So if you have a new technology that makes things more efficient, people are required to bring that technology to market. It's not something that should cause anxiety or fear. It's something that should be understood and embraced to move your business forward. And you should have a chat with your accountant about that.
Yeah, good points. And I guess to close up on ChatGPT, for any listeners out there, if you're wanting to start a business or if you're already in business, ChatGPT you should view ChatGPT as a potential boost for your business. It is a new wave. It's the new shiny thing that's being talked about at the moment. But ultimately, if the mass wants it, they're going to get it. And so if you're an early adopter to this technology and you're able to find a way to make money by using ChatGPT because there's limitless use for it, that's just going to be positive for yourself, and you'd be able to create an opportunity for yourself.
Spot on.
Now, onto a bit of a more technical topic here. And we've got our technical advisor in-house, Bloxy. Property tax. So there's been a lot of changes in different states with property tax. Bloxy, can you enlighten us about the changes that you feel are important to the listeners out there?
Sure, thanks, Phil. So you may be listening from home and you may have an investment property in Victoria or Queensland, and it may be a shop, a commercial property, or it may be a home that people are renting off you to live in. There's many of you out there. And a key change that has happened recently is the Victorian government has made changes to land tax and stamp duty in that state. So these changes are designed to raise revenue and pay back approximately $32 billion in debt that the Victorian government assumed to pay for various COVID-19 incentives. And these measures are designed to stay in place for a decade. And it's interesting to me that even though they're designed to stay in place for a decade, they've been termed temporary. So on the stamp duty front, this only affects commercial properties like shops that you might own, for example. And the idea is to phase out stamp duty and implement what's called an annual property tax, which is like a land tax. And it's calculated based on 1% of the land value of the shop. On the land tax front, there's two prongs of change that the government has tried to implement. There's a temporary, what's called a surcharge, and then there's also a reduction in the land tax thresholds in Victoria. So with the first one, the surcharge, that basically is a flat fee that all of you property investors in Victoria are going to have to pay. So it starts off at $500 and tiers up all the way to a percentage of the land value that in theory is unlimited. Then there's also a reduction in the land tax free threshold in that state from $300,000 down to $50,000. Now, interestingly, this change is expected to capture an additional 360,000 of you land investors in the state of Victoria, of which I am one. So a lot more people are going, a lot more property investors are going to be paying land tax to the Victorian state government as a result of these changes.
So if you have an investment property worth, and the land is worth more than 50,000,
Which is
you
most.
will now be subject to land tax
Correct. And that's pretty much everyone.
in Victoria.
Everyone in Victoria who has a non-exempt block of land. So an exempt block of land is like your main residence.
Yep.
Your home.
Okay, so the only thing we're talking about is your investment properties, not your exempt properties. And the land value where these changes kick in is at $50,000.
Yeah.
So there's going to be some car parking spaces in the middle of Melbourne that have more land value than $50,000.
Yep.
Effectively, every land investor in Victoria needs to understand these changes and how it is going to impact on the return on their investment.
Well, that's a big change, Chris. Because when you think about investors, they obviously speak to their accountants. They get the structure advice, tax structuring advice. They might have a unit trust in place. This change kind of makes that redundant, doesn't it?
It's very hard, Phil, to advise a client based on the way that the law is a few months ago, only for it to completely change. It does change things significantly when there is this amount of regulatory change.
It adds complexity.
It certainly adds complexity, and that's something that we'll discuss.
Yeah. Well, I think we all us accountants anyway, knew that this was sort of coming just because of the amount of COVID grants that were being paid out to business owners and individuals. The government were going to, recoup that back some way, somehow, and that's generally through new forms of taxes.
Sure. So that leads us into our next talking point, which is just the amount with anybody who's a land investor out there, with any of you who have property investments, you really need to think about the level of regulatory risk that applies to land investment in Australia. So it shouldn't be dismissed or underestimated, because land is a very easy asset for a state government to tax. It's low-hanging fruit. And then that leads me to question, well, what next? What's next on the reform agenda to get their hands on the value that is in land? Is it taxing the main residents? Is it taxing unrealised market value increments on investment properties? Could it be tax-free threshold inside your main residence for pension eligibility, so that if you're living in a $10 million house, you only get $1 million worth of exempt main residence value before you're excluded from the pension, which would force a lot of older people to have to sell their main residences. All of these ideas have been discussed as tax policy reforms. So the message to all of you property investors out there is, don't assume that the policy settings that are in place now in relation to your land holdings are always going to be the same and consistent, because they will not be. And you need to be able to understand the changes, talk to your accountants to move with the flow.
And on that point, Blocks, there is actually in Victoria, I think they have implemented a windfall gains tax, which is again a tax on unrealised gains. I won't go into the detail on that, but that's an example of a tax on unrealised gains coming in at the state level.
Yeah, that one's more for developers or people who hold a land bank and then zoning changes
From
occur.
rezoning, yeah.
So that's another example of a policy change that can really affect your land, the value of your land holdings. There was, up until not long ago, there was a fairly consistent land tax map of Australia that we'll flash up on screen now for the viewers at home to have a look at. Now, this is a map that sets out what the land tax thresholds were in each Australian state and territory. And it was remarkably consistent for decades. This has been a remarkably consistent map. Since COVID, it has changed radically. If you remember back a couple of years ago, maybe not even a couple of years ago, maybe a year ago, the Palaszczuk government in Queensland tried to implement national state-based taxation. What they were trying to do, the Queensland guys were trying to get land holdings Australia-wide disclosed to the Queensland government so that they could tax anyone who was a Queensland land investor, any of you who have land in Queensland, on your Australia-wide taxable land values. Now, this is straight up unconstitutional, but it goes to show the level at which state governments have become emboldened and have been willing to try things on to take money off of you land investors in illegal ways. At the time, the Premier of New South Wales was a Liberal guy, Dom Perrottet, and he point blank rejected the idea of forcing New South Wales citizens to disclose their New South Wales taxable land to the Queensland government, because enforcement would practically have been impossible unless every other state government agreed to hand over certain data to the Queensland OSR, Office of State Revenue. Now that we have state governments across the board in Australia, you have to wonder whether or not that type of attempt is going to resurface, either in Queensland or in other states.
You mean state Labor governments?
Correct. So every state at the moment is controlled by a Labor party.
Yep.
So there is no Dom Perrottet in New South Wales, who is a Liberal government, to push back.
Yep.
So it's really a watch this space evolution type situation.
It is massive. That policy that was put out there, the proposal, it did change a lot of the way property investors were thinking. And a lot of the property investors at the time, prior to that, were investing in Queensland because that was a great place to invest in at the time. But once that happened, we could see a lot of investors direct themselves away from Queensland and move to other states such as Adelaide, Melbourne, even Perth.
Absolutely.
But it's
I had a lot of clients who invested interstate based on advice that was sound at the time. So a former strategy that would be sound was simply to split your land investments across Sydney, Melbourne, and Brisbane to make sure that you didn't pay land tax in any state. That was an absolutely legitimate tax planning strategy. Now, you have to really be aware of the shifting sands in relation to land tax in each state, as we can see by these measures that have been implemented by the Victorian state government. So one final area to discuss in relation to the changes that are happening with land tax at state levels for all of you property investors is the yield versus growth situation. So state governments now are clearly moving away from the sugar hit of stamp duty. The former state government, the Perrottet Liberal state government, moved from stamp duty to an option for land tax.
Yeah.
But now that we've got a new Labor Minns state government in, they've canned the Perrottet idea and have moved back to stamp duty for first home buyers with changed thresholds. What this says to me is that the governments have realised that stamp duty, which is lumpy and which is subject to market value fluctuations, is not the ideal source of revenue. They want little chunks of revenue every year.
Yeah.
They want consistent little chunks of revenue every year rather than big hits up front when property sales occur. And that's something that we should all reflect upon. So a government has perpetual succession. It will go on forever. As individuals, property investors like yourselves, we have a finite investment lifetime. But we should still be thinking what is the best way to extract value from any investment, not just land, but from any investment. Now, chasing capital gains incurs significant costs.
Yep.
Whereas seeking yield from your investment, which is what the state governments are now focusing on, gives you a little bit, but consistently. It's what Bogle referred to as the donut versus the bagel. So the donut is the sugar hit up front that makes you feel good for a while, but then you crash. Whereas the bagel, it doesn't taste as good. It's a little bit sour, but it's denser and it leads you to be more full and it's more nutritious. So that's kind of the yield growth spectrum. And I think that every land investor out there and every investor in any asset out there should reflect on what's happening with land tax in that kind of prism.
Yeah, good points there, Bloxy. I think it's very important for you investors out there to be seeking advice from your tax advisors to make sure that you are staying on top of the reforms. And there's only going to be one constant here that you need to be aware of, and that's change. There will be more changes to come, especially in tax legislation. So please make sure you are speaking to your accountant to make sure you're on top of it.
Yep.
That's all we have time for today's episode. Thank you again for joining us. And if you learned something here, please share this episode with someone else. Until next time.